Check, check. Mic check. Checkaroo. 1, 2, 3. All right. We are up and running. Good evening, everybody. Hope everyone's having a great day. I am happy to finally be able to join you tonight. So glad to be back here. And, dude, oh, hey, what's up, Kirk? How you doing, buddy? Hope you've been doing well. Let me know how you've been, brother. Good to see you. Getting chilly here. Woo. So I ended up coming back from work and basically recapping the market at the end of the live stream today. And so I'm not going to go too deep into that this session. So we're hopefully going to keep this one nice and short and sweet, focused on what we see for tomorrow. So we have Asia session already in play, and we have a lot of stuff, lots of stuff to watch out for tomorrow. So let's go ahead and get into the charts, and we'll talk through what to expect tomorrow, because there's a lot of landmines. Okay, so let's head over to it. So Wednesday, this particular week is a heavy week, full of really high volatility things, but this particular Wednesday is an interesting one. There is the 10 a.m. JOLTS jobs openings, which very much so causes volatility many times other than not. Combine that with the ISM manufacturing PMI, there will be some volatility around 10 in the morning. Following that, if you aren't done trading before 10 in the morning, try not to trade until after the 2:30 p.m. call, because we have FOMC a statement and then a press conference at 2:30 p.m. Typically, this is a two-stage delivery where you'll have mention of a rate at 2 o'clock. You'll have any rate discussion. There's going to be some pretty high volatility. So generally, FOMC is two-stage. It doesn't always have to be, but whichever direction it starts in, at 2:30, 2:45 p.m., you want to start to look for evidence of reversal and to take it in the opposite direction. It could go as late as 3 o'clock, but generally 2:30, you'll pretty much start to see consolidation, and you'll want to start to look for evidence of it moving in the opposite direction. Now, that doesn't mean trade without stops. Make sure you're trading with the appropriate stops. But tomorrow, if you're not done trading by let's say 8:30, 9 a.m., it's going to be a pretty brutal morning. Just watch it if you have never traded it before. Okay, so now that we have hammered the fact that tomorrow at 2 o'clock is going to be brutal for some people, you're going to see lots of blown accounts. Let's head into the markets and take a look and see what we see for tomorrow. So we're going to go to the daily, and we're going to see how price has booked. Okay, so we're going to move this over a little bit so we can see a little bit more. Okay, so we obviously are still within this area. We've traded up. We traded up above yesterday's high, which was one of the buy-side liquidity areas that we had mentioned earlier. And let me elongate this just a little bit so you can see a little bit more about this price action here. So we know that beginning of the week happens, right? Boom, Monday. Or I guess it was more like open, low, high, close, open, low, high, close. And now we start to see candles beginning to form and fill in within this area. So I believe that come FOMC, if we see FOMC, we'll have some stuff happen in the morning, but I believe we will see FOMC take us up potentially into this Wicks consequent encroachment here, 14,596. And when we go down to the 4 hour, I'll show you this fair value gap that I've been looking for as well. This here is you know what? I'm actually going to remove it because It is a rejection block, so I mean, it certainly could be an area of liquidity, but I don't think, I think we're gonna not refer to it, honestly, just because there's so much above us that we can certainly go into. I think that'll serve more as clutter. Could be famous last words, watch it go straight to that in reverse, but we'll see what happens. So we can kind of see Asia has started to move down very, very, very slightly, mostly just consolidation, and nothing more to say right now, except that we may want to also see and extend this over time and set it to the high of yesterday. So 14,503.50 is our key level there. Let's make sure we jot that down. Okay. So now we have 14. We have a key level, yesterday's high, that serves as buy side liquidity. And then, of course, if we are going to continue higher, we will take a look at the consequent encroachment, or the midpoint of this wick here. It's a daily wick, so I pay attention to that kind of stuff. Let's go to the simpler Fibonacci. You don't need to know all of those levels, but you just really need to be able to flip this and split it up into halves, right? So one thing I'm going to do is I'm going to steal this dotted line because it's on a daily level, and I'm going to put it here as well. So we want to mark this as 14,361. Let's see, it's .45, so let's round up and give it a little bit of juice there. Okay. So 14,361.5. Let's give this a name here and kind of label it minus 1 day down wick CE, consequent encouragement, or midpoint of a gap. Okay, so we have that key level on the daily. We have the buy side, also key level marked on the daily. And so we'll get down into these in a moment when we go down to lower time frames. I'll leave them on for the time being because I referred to them today and at the end of today's live session, but we need to go to the 4 hour first. So as you can see here, 4 hour shows that high, that buy side liquidity we're looking at. It also shows that consequent encroachment over here, as you can see here. So we're going to keep those in mind, but what we see up here, what do you see here? I've referred to this a couple of times, right? So this is a sell side imbalance from this low of this candle through the body to this high of this candle. We call this a fair value gap, specifically a sell side imbalance, buy side inefficiency. And if you recall, I had this marked here as well as a we call this a rejection block. So in this case, it's going to be more of a what's called a mitigation block. And the theory behind why that is a mitigation block is because users that went long at this point in time, this down move probably caught a lot of them out. And if they didn't have stops, they're underwater. So if price comes back up to this level, those people are going to be itching to get out from their drawdown and at break even. So there's going to be people selling there and potentially others that are selling at that time too. Now, keep in mind, this is FOMC, so we're not going to see these things respected nearly as much. However, just for the sake of leaving this there for reference, I will leave this here and leave this as a buy side liquidity. So we can see that. I'll leave it there for the time being, and we can see if it refers to that. But at the very least, we've got this. We're going to move this a little bit closer. We have this buy side liquidity on the upside. We'll see if Asia or London takes that out. And then, of course, these buy sides on the downside, which we will refer to on the hourly chart. Okay, we'll get there in a moment. So what do I think is going to happen? So tomorrow, we can see that when we opened, we haven't had any movement down, right? We kept this open the whole time. So I want to bring this out over time because I was thinking and saying earlier that, hey, if we can't get above this, it's going to be really weak, and it did not this afternoon. So it busted down through Asia lows, and we'll touch upon that on the hourly, but I just want to let you know that this fair value gap, or rather this new week opening gap and liquidity void are not filled yet. They haven't been touched yet. And look at all this sell side liquidity forming now. So Friday's non-farm payroll, I fully expect us to like come down and delete all of this stuff here. But in order to do that, we need to see some upward motion. So we need to potentially fill in this fair value gap. Is this a valuable fair value gap? So I'm going to take this high to this candle high to candle low. And we see that the 50% mark, or equilibrium of this swing, is above 50% mark. In fact, that's at optimal trade entry. So what else? And what is optimal trade entry? Well, it's another model of ICTs. If you went through the, I think it's the, there's a whole series on that, but there's a playlist all on optimal trade entry. So we look at this 61.5 level. Look at what's exactly at that level. There's a confluence with this daily downwick consequent encroachment, right? So this is an area that I would be keen on looking at. If it fails that and continues upwards, it could go nearly as high as this new week opening gap low. Why do I say that? Well, there's a buy side imbalance, sell side inefficiency up here. It could turn into an inversion fair value gap coupled with an old new week opening gap low, coupled with a 70.5% retracement here. At most, at the top, remember on the daily, we have this sell side imbalance. It's these purple lines here. We have this purple line and this purple line. Let me get rid of this here. But you can see that there's one more confluence up there at the very top here, where there's a fair value gap here, a sell side imbalance basically, and there's this SIBI high that has not been touched yet. So given the nature of some of the things that are happening this week, I could certainly see us trade up and through this point in time, or maybe like trade up to it, trade down back onto this volume imbalance, and then continue upwards. There's a lot. We're right in the middle of a range, okay? And it is a very, very difficult week. If you haven't traded a week like this before, even if you trade demo, like be careful, because these kinds of weeks can either give you insane, unrealistic gains, or they can ruin your life if you're trading real-time accounts. So be very nimble, trade with your stop loss, and be okay if it gets hit. If it slips, don't panic. Just try and close out of the trade. This will happen. And if you haven't had it happen to you, it's bound to happen at some point. And so just be okay with that. Don't risk too much, because that's how you can kind of recover from those. So I expect it to come up into this 4-hour SIBI, and then we'll see where it wants to go. Does it want to reverse there? Does it show me signs of reversal there? Or is it showing me signs of continuation up to these PD arrays up here and up here and up here? There are cases to be made both on the upside and downside. What does that mean? When we say there's cases to be made on the upside, like for price to go up, and there's cases to be made for prices to go down, we say those are low probability environments. So doesn't matter what I chart today. It can go both ways. It can go both ways at the end of the day. So let's head down to the hourly. So let's look at today first. So this is a chart of today's hourly chart. You can see in Asia and London, it went down. Remember, in the morning, I marked these two out, and I marked this buy side out. It was at this top candle. What happens? Well, in the morning, we trade up, and then right at the bell, we drop down, take out sell side liquidity, completely reverse, take out buy side liquidity at the end of the day, right? Or actually close towards the end of the day. Nothing as clean as that. I mean, that was pretty dang clean. It was difficult because you didn't have a bias one way going the whole way, the whole time. But these kind of weeks happen when you're at the end of a major run down, right? At the end of a sell side, a sell side, and you're beginning a buy side model here, a buy, they call it market maker buy model. So I would anticipate that potentially we can get all the way up to here. We have seen higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher lows, higher highs. So I anticipate there's no fair value gaps to be seen here. There are consequent encroachments to head down to. There are sell side imbalances, which I don't think we're going to take, not at least until FOMC at 2:30, 2 to 2:30. It's possible we could take those at 2 o'clock and then use that to head upwards even further during FOMC, the 2:30 p.m. But those are the scenarios that I kind of see. I see us taking out one of these sides of liquidity and then all the way up until at least the 4-hour SIBI that we see here, and taking out the SPY side. I think that will happen. I just don't know exactly when it will happen, but I think that will happen, and then some. So those that I'm looking for price to go to the upside. When it gets to here, that's when I will be looking for evidence of retracement. Now, I am prepared for this to continue upwards all the way up to this point in time here, because you can see there's relative equal lows here. It's a sell side imbalance high that hasn't been touched yet. So this could serve as one of our breakers, this high, low, higher high, and then boom, lower low. It could come all the way up there and then tag down. Now, this could happen very quickly. It could happen right in the first 15-20 minutes of FOMC that it hits that and then comes down. Or we could trade down at FOMC, and we could just keep trading down, take out this sell side, and NFP Friday could jack it all the way back up there. So you can see how, compare and contrast some of the earlier days where we still weren't sure what direction it was going, but we had an idea. Today, for tomorrow, I don't have a clue. I have a rough idea where I think it will go, but it doesn't have to go in that direction. So be very nimble. Scalp tomorrow. If you're going to trade 6:30 a.m. till 8:30 a.m., that's where some of the cleaner price action is going to be. And then after it gets to 10 o'clock, just be really careful, because from about 11 or 12 until 2 o'clock, price is likely going to do a nice little wiggle. And then as it gets closer to 2 o'clock, you'll see it start to consolidate very heavily. Okay. And so you've gotten a couple of models of what I anticipate occurring tomorrow. Do not try to pick a high. Do not. You need to look for confirmation. So what does confirmation look like, you might ask? Well, on the hourly chart, back here, you see that we had been going down. We get a retracement up. We get a 1, 2, 3 drives pattern. And we start to head lower, right? But is this enough for us to feel confident that it's going lower? No. We had to see this major displacement taking out all these short-term lows. We see this displacement. That's what you want to look for, okay? When I say look for evidence, it's those types of moves that you want to look for, those types of characters, those types of characteristics that will help you identify when it is right, when it is ready for you to take your move. So yeah, I'm not going to go down into the lower time frames because it doesn't really make sense to. If you want to see where some of the highest probability trades for today was, go to the live stream and go to the last 5-10 minutes of it, because I came back online after I got home from work and I talked about what the highest probability settings scenarios were for today's price action. There were 3 major moves that you could take, 3 extremely lucrative 60, 70, 80 plus handle moves that were available today. And they were available relatively smoothly. So go back and watch the end of that video if you haven't. And I think that's it. Kirk, I don't know if you have any questions, if you're still here, happy to answer it. Yeah, I don't know if anyone else is still out there. For one, appreciate you for joining tonight, and hopefully this was insightful. Let's see. Doesn't look like let me make sure I have these right, actually. I think that's about it. Yeah. All right. Well, doesn't look like there's too many questions. I'm a little bit more lively tonight. I don't know if you can tell I was falling asleep during yesterday's market review. I hate it when I put stuff out like that. It's just not very good quality stuff. So I'm kind of ashamed of yesterday's. Kirk Townsend, nice recap. Okay, great. Kirk, you should let me know. I think, are you trading demo? Are you what are you doing? Are you in the learning phase right now, trying to learn some models? Are you a trader already? Are you trading prop firm futures? Are you trading forex or options? Let me know what you're getting into, man. I'm kind of curious. Or if you're just training too. I mean, that's need your turtle soup model. Oh yeah. Okay. Kirk, let me do this. There's a great example. Okay, I guess I lied. I'm gonna go through this today. So there's a great example of turtle soup, Kirk, today, and this uses the liquidity which formed in the previous day and higher time frame. The key is higher time frame bias has to be there. Okay, so remember on the daily. Remember how at the beginning of the week, and I'm going to go back to the daily now, 8 months with ICT. Awesome. That's good. It'll get there, I promise you. Just, continue to review some of the lessons that he goes through, because I've learned a lot of subtleties that I missed the first time around. So, okay, great. Apex evals. Okay, fantastic. Don't do what I did with like 10 contracts. You'll blow the account quickly, but you can try. But it's better if you go for the $250 a day. Okay, so remember, Kirk, at the beginning of the week, we saw last week ended with this big giant down candle, and then the Friday ended with kind of like one of these candles. And then the beginning of the week started, and let me raise this up a little bit. So let me go like here. So the beginning of the week, this is all we had on Sunday, right? So remember I had mentioned, hey, here's this daily volume imbalance. Oh, nice. Insert name here. ICT for a year and a half. Hell yeah. That's awesome, man. Can't wait to hear about your growth, and it takes time. There's nothing about it. It just takes concentrated time, just like anything else. You'll get there though. If you're not already there, you're probably much more advanced than me, honestly. But anyways, Kirk, so this volume imbalance from this candle's, the close to the open of this candle was a daily volume imbalance, right? So I knew that price was going to likely draw up to it and refer to it. Now, yes, on Monday, it didn't fully close up through that volume imbalance, so I kind of treat that as a fair value gap that still needed some true closure. So what do we see today? We see that it has gone up through it and then some, right? At the end of the day, right? And then, that just, remember, just from a price action perspective, note that we drew up into it. That's really all. That's the concept that you need to look for on the higher time frames, is where could price go? And then let's go down to the hourly to use today's price action as an example for turtle soup. So And let me pull up one example. I'm gonna pull up today's live price action. If I can find my way to my channel, and then hopefully I have the live market stuff. Okay, here we go. Okay, so if you remember in the morning today, I'm gonna fast forward through some of this stuff. So remember in the morning I was going through the same stuff here. Let me make this a little bit wider so I can move this ahead a little bit faster. See if we get to the hourly here. Okay, so we're on the hourly now. You see how, remember how I marked this level? So this was a sell side. We could see price was going up during it's 8 o'clock in the morning right now, right? So remember, we marked the sell side liquidity on the hourly, knowing that we were expecting price to go up into that volume imbalance like it has already, right? But it hasn't closed on the daily yet. It hasn't closed there. We want to see a nice solid body move through that daily volume imbalance, right? Because we haven't seen that yet, we were thinking, okay, well, there's some sell side liquidity that it could take out. And so we were marking that, right? We marked this sell side liquidity in London, and we marked the one that was a little further away in London close yesterday. So let me fast forward through this a little bit. And we marked this buy side liquidity there, remember? I'm going to pause it there. Remember, we talked about this high here as well. So now you've formulated in your mind what is the dealing range for today's price action if we've stayed within those like parameters, right? So you know that, hey, there are likely people who went long who are having their sell stop. So like if you go long, you buy, right? And you set a sell stop at break even or just below break even here, typical retail, right? So what happens after we set these two values here, right? You know what transpired through the rest of the day. And so what we look for for those turtle soups, what we look for, and I'm going to pause it here so I can go back to the chart. So just remember, we had that Asia 14,320 and that 14,476 marked. So what happens at open? I need to go down to a lower chart to show this, but what happens at open, we end up having this first swing to take out sell side liquidity before we head up to take out this high of 14,476.20. Let me put that line back here, okay? Remember that line. So turtle soup, the concept of turtle soup is such that price, if you know the higher time frame direction, which was biased to the upside in the first half of the week, although I'm on the grand scale, I was still bearish. I was okay with price moving up in the first half of the week. So I could see, hey, this is a low where price potentially could reverse on the hourly chart. What do I do next? I have maybe a 5-minute, let's go down to the 5-minute chart because we can see a little bit more on that chart. So a 5-minute chart. We can see 2022 model, and this is where you start to really need to focus in and learn a couple of models. 2022 is perfect for this because if you can see, what do we see here on the 5-minute chart? We see this fair value gap here, right? And I'm going to zoom in real big on this one because it's very, very small entries, but you can see the institutional order flow here right on this candle right there, okay? I'm going to mark this here as a sell side imbalance on the 5-minute so that we can see this when we go down to the 1-minute. But I just want you to know that's what my eyeballs would have been looking for if you see something like this big. Would you agree that this is displacement these 1, 2, 3, this 15 minutes of price action, doesn't that look like it took out a short-term low here with some volume and true displacement? There's a couple fair value gaps, right? That's how you know that this is going to go in some direction. And you can see typically when you study this model, ICT tells you, hey, at the high of this candle, 14,431.50, set your limit sell orders. Where does it go up to? 14,431.75. 1 pip above, okay? So this is 2022 model. This is going to be important because this leads us into the turtle soup model we see further down here, okay? So let's go down to the 1 minute. And let's go back to the price action for today. Okay, so on the 1 minute, we can kind of see how price came back up just barely into that 5 minute sell side imbalance, gave you another opportunity to get in, and then went down again right before open. So remember, at open, you're seeing one of these things here. Would you agree, Kirk, that price displaces lower than this short-term low and even this short-term low? Would you agree that we see that as displacement on the 1 minute chart? So when we see that, and when we've been going up quite a bit, we can start to see that 2022 model come into play. So we have an idea that it could trade back up to this fair value gap, could trade back up to this fair value gap. And what does it do then? It spikes through it. So you could have had your order at 14,420 at around this fair value gap's midpoint and had a 10 handle stop loss, and that would have kept you safe by having your stop above here, and you would have still caught that move from 14,420 all the way down to, let's say you took profit like even at this level here. What is this level? 14,360. That's 60 handles within the matter of 1, 2, 3, 4, 5, 6 minutes. So that 2022 model ends up taking you all the way down. Remember, this sell side's here now, right? So this, we know that there was previous sell side over here. We know that price is hovering around there over here. And then what do? We see that last drive down past this sell side imbalance, or the sell side liquidity here. And then we see price rocket back up. Now, not entirely all the way back up, but it does rocket up, and it creates a fair value gap here, which if you were fast enough, you could have taken initial entry right here. But you see how this, after taking a key level, you see how this has created a higher high than a short-term high here. So this did create a higher high than a short-term high here, but it didn't take out that key level, that key sell side liquidity here. So this is the secret sauce here for turtle soups. You want to see displacement to the upside when you see this. Now, where was the true displacement? It was over here at the 10 a.m. silver bullet. So this was the fair value gap, which formed on the 1 minute chart. And so all you see at 10:08, you see something like this form. And you're like, oh, wow, it's moving up, right? Now, you see at 10:09, this fair value gap forms. So you're thinking, oh, okay, let me set a buy order around there. And if price comes back down to it, it's going to continue upwards. Thinking like treating this as a mitigation block area to move upwards. You would have missed this. Even if you tried to chase, you might have been lucky, but eventually you become unlucky if you didn't take profit. So you take this all the way up. It gets to almost that opening range settlement high and low, and then starts to come back down, right? So within a span of 20 minutes, you see a price come back down to what? Not quite this price, right? This low of 14,351.75. 14,371.25. So not 351.75, 352. But then it hits it right there, right? First entry, second entry, third entry, fourth entry, and it blows up here. Absolutely gets you all the way back for 60 handles easily. And then it continues upwards, comes back down, and ends up giving you a rough afternoon, eventually hitting that buy side liquidity. So do you see a turtle soup in here? I think that this taking of this sell side liquidity is your turtle soup. And that's what you want to look for. Sell side liquidity, key level taken within the context, within the frame of your higher time frame bias. That is so key. And this is why I'm always starting you at least on a daily chart, right? During the weekly preps, I start you on a monthly or weekly chart. During the day-to-days, I keep you on the daily charts, and for a good reason, right? I'm not hopping straight into the 1 minute, not hopping straight into the 15-minute, 60-minute, 4-hour. I always start you on the daily. So if you can start there and do your higher time frame analysis every day, do it for a while, you're going to see these as well. Now, what we look for, remember, for those turtle soups, turtle soup entry is if you were to take this entry right here and take that movement up. That is one of the hardest things in the world to do. One of the most difficult ones to do. So what I end up doing is I don't tend to take that exact moment because there's a lot more risk involved for me because I'm not 100% with it yet. I have done it before. I just don't like to do it with live funds just yet. So I look for other signatures. What else do we see here? You know, there's a 1 minute fair value gap down here that we could have tested. This one for sure worked, but let me show you the one that I would have taken is actually on a much lower time frame. And you can do this when you get to Ninja. When you have NinjaTrader, you can do this. And I think we're around here. Okay, so on the lower time frame, price is fractal. And you can kind of see how right when we took out that sell side imbalance, right there. All right, we see a short-term high form on the 5-second, and we see displacement. Boom, boom, right? So now we have two fair value gaps. Could enter here, could enter here. Now we see that prices entered down here. We would be long at that time with our stop loss at this low down here, below this short-term low. Because if it heads down there, we're off sides, right? It's going down. But what happens here? We see a little bit of retracement here, retracement here, retracement here. We got all these people who had trailed their stops up. We got them stopped out right there. That would have been another good entry point. And we stopped those people out as well. And then what happens? We get that nice big 1 minute movement. And these order blocks are the next level. I don't want to, don't worry about order blocks right now. Stick with your model. But this is one of the high probability moves that I typically look at when there's key levels that get taken. I move down time frames. So whenever I see something like a major key level happen on a, let's say, hourly or 4-hour chart, you generally can go down once you see the move has confirmed. You can go down to a lower time frame and look for an opening to take the rest of the direction down. And that is one of the highest probability trades that you can do. That 2022 model is one of the easiest ones to practice, honestly. That model alone is pretty dang good. And then combining that with what you learn in 2023, as well as the core content in 2026, those are the things that have now crafted my models to trade on and to look for. So, Kirk, I hope that made sense. If it didn't make sense, rewatch that segment, look at what I'm looking at, and then pull up your chart too and see if that works. So I hope that was insightful as to one of my models that I trade. And actually, I gave you a few models there. There's a few models that you can look for, but specifically for turtle soup, that's one of the most trickiest ones. I wouldn't recommend you focus on that one, honestly. The 2022 model is probably the best one to focus on, and then core content maybe. Even today, I go back and study ICT. I go back and study old lessons. There's concepts that I haven't mastered either. So hopefully that helped. Kirk, and I don't know, like insert name here if you're still here or not, but yeah, I know it's 10:30, so we need to all go get our rest. But this lesson will be here for you. I mean, this will be here to rewatch again. Watch it a few times, and then go look for it in your charts too. Go scroll back on many different time frames, okay? And just look for it, Look to see where you can find it again. Look to see where you can see on different time frames where we've risen up, 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 and then a short-term low gets taken out, and then price trades back up to it, takes out a buy stop, Judas swing, continues lower. They're everywhere. Once you start seeing it, he wasn't lying. Like, once you see it enough, it just pops out at you. I don't know how to describe it. It just happens all at once. So you guys are 8 months in, insert name here. You're here a year and a half. That's incredible. I'll look forward to hearing about your trades. I hope you're on social. If you're on Twitter or IG, definitely let's connect there. I'm not on Instagram very much anymore. I'm mostly watch Twitter for news and seeing what's happening. Yeah, when you see it, it keeps showing. Yeah, absolutely. Absolutely. So, and it's just a matter of time and risk management, right? From that point onwards. So with these Apex accounts though, it's really, really key once you get to your performance accounts to keep low risk. I don't know how much you're risking, how many contracts you're risking, Kirk, but once you get to the performance accounts, and you will get there. If you haven't gone there, you'll get there. Don't worry. Keep it low. The lower your contracts, the better. I know it's going to feel ugly to do that during evaluations, but I failed like hundreds of these, and it was really bad. I shouldn't have been trading. I should have just bought one, traded demo, paid the monthly fee, and just traded sim the whole time. Charts stay marked. Insert name here. Yeah, absolutely. And then been trading since 2017. Oh man, that's awesome. Yeah, 2017. That's good that you've been able to put in some time and get that experience. Keep it going. I look forward to the day when I can not full-time trade, but just trade and be done with the day. Go do whatever you need to. Maybe shove some into real estate or something. 2 150K funded accounts. Oh, awesome, man. That's killer. Yeah, I've got the 150Ks. I mean, that's what I started on, but at the end of the day, the 50Ks allow for a much quicker entry into the market, into the funded accounts, and it's much cheaper. It's a lot more affordable. It is not affordable to the average person, of course, but I'm blessed to be in a part where I can afford the $140 or total $180 for every one account, right? Because it's $140 for a lifetime fee, and then 30, 19 or 30 bucks, depending on what sale you get for the Apex funded accounts, the evaluation accounts. So right now I think I have 150 account and then 19 or so performance accounts. I'm maxed out, so I'm not allowed to have any more. But the only reason I do that is so that I can use what's called a trade copier. So Apex has this thing called a trade copier where I can, select some accounts and say, hey, I want to copy, if I trade 141, I can copy 142 and 143, and then that copies over some of the trades to the other accounts. Keep in mind, you've seen me trade live funds, like performance accounts. I'm only trading 1 micro at a time, 2 micros maybe. I usually, let's see, insert name here. I usually stop my trade about an hour after the bell. Great. Yeah. If you're done trading by that, it's a great feeling. When you're done, you hit your goal for the day or the week and you're done trading. That's what I want to get to as well. It is very difficult, but I'm starting to see evidence that I'm able to reproduce my daily income and then some with these trades. So with micro contracts of all things, right? With micro NASDAQ. So it's a slow process, but very rewarding once it starts to happen, once you start to see things and once you start to become more of a risk manager instead of being a trader. I can't tell you how good of a shift in mentality that was when I truly understood that at the end of the day, remember, at the end of the day, I know for 1 micro NASDAQ contract, 30 handles can net me 60 bucks. And in a $50,000 account where I only have $2,500 in drawdown, I can risk 1% of that to be a max loss of $25, right? So I'm risking 25 to make $60, right? That gives me, it's roughly 1 to 3. It's like 1 to 2.67 or I forget the exact number, but either way, you're risking 1% of your total drawdown. This allows you to stay in the game very much longer than you could before. At 1 micro NASDAQ contract, that is the absolute smallest that you can do. And notice how as we ramp up, from $2,500, let's say you make a grand total of $5,000 total in your account. Well, that now means you can risk 1% here, which is $50, and you can trade 2 contracts. What's the beauty of that? Well, if you go for those 1 to 3, 30 handles, 2 contracts nets you $120, and you're risking 50, right? That's a pretty awesome deal. And if you ever get to this point and you get into drawdown, well, okay, you've drawn down 2 contracts. You trade with 1 contract until you've made back half of the amount you lost. And then when you're in the right mind space, you can then continue and trade. That's how you lower your risk curve. That's how you lower your drawdown curve. And that's why I created this freaking Excel sheet for micro NASDAQ. You can create this and use this. And actually, I think this Texas UAV pilot, shout out Texas UAV pilot, he gave me a couple of really good suggestions here. So I'm going to make new versions of this so it's easier to use for the user. But for now, at least if you sign up on the website, on the video, I put in the link in the description for those who really want to look at how that math works out. That's exactly how you need to be thinking about your trades as a risk manager. And yeah, I think that's it. So boo, boo, boo. Good evening, Johnny Lynn and the traders present. Hey, Phoenix. Sorry you caught us right at the very end, but don't worry. I went through a couple of really, really good models that I would use today, and I pointed them out on the charts. So I did this at the end of the live stream, but I went into detail again on a couple of models that I use. So definitely check that out if you're looking to study some of ICT's 2022 model or the turtle soup model as well. So we talked through those earlier today. I've been talking for a little while now. I know I was hoping I was hoping for this to be a shorter one, but it's just such good questions, and I'm really happy to get to meet have Kirk here, insert name here, having you here, and Phoenix, you as well, and whoever else was watching. I hope this was valuable. Yeah, I think that's it. Where our draws are hoping to be in the future for this week. We've mentioned that at the beginning of the week as well. So keep an eye out for that. Don't try to time the top. Remember that. And good luck tomorrow. I will be around. I need to see what kind of meetings I've got, but should be around tomorrow morning. And yep. With that, I'm going to close the call for today, and get some rest, everybody. Get some good sleep, and I will catch up with you tomorrow morning. Take care.